Welcome to A Random Walk Down Wall Street, a comprehensive guide to understanding the stock market and making smart investment decisions. In this chapter, we'll introduce the concept of a random walk and how it applies to the world of finance. The author, Burton G. Malkiel, explains that the term random walk was first used to describe the unpredictable nature of stock prices. We'll delve into the history of the stock market, from its humble beginnings to the present day, and explore the various factors that influence stock prices. With this foundation, you'll be better equipped to navigate the complexities of the market and make informed decisions about your investments. As we journey through the book, we'll examine the different types of investments, including stocks, bonds, and mutual funds, and discuss the pros and cons of each. Whether you're a seasoned investor or just starting out, this chapter will provide a solid foundation for your financial education. In this chapter, we'll explore the concept of risk and return in the stock market. Malkiel explains that all investments carry some level of risk, and that the potential for return is directly related to the level of risk taken. We'll examine the different types of risk, including market risk, credit risk, and liquidity risk, and discuss strategies for managing and mitigating these risks. You'll learn about the importance of diversification and how to create a portfolio that balances risk and potential return. We'll also discuss the role of emotions in investing and how to avoid common pitfalls, such as fear and greed. By understanding the relationship between risk and return, you'll be better equipped to make informed investment decisions and achieve your financial goals. As we continue through the book, we'll explore more advanced concepts, including technical analysis and fundamental analysis, and discuss the importance of having a long-term perspective when investing in the stock market. This chapter focuses on the importance of having a long-term perspective when investing in the stock market. Malkiel emphasizes that investing is a marathon, not a sprint, and that it's essential to have a well-thought-out strategy and stick to it. We'll discuss the benefits of dollar-cost averaging and how to avoid the pitfalls of market timing. You'll learn about the importance of reinvesting dividends and how to take advantage of tax-advantaged retirement accounts. We'll also explore the role of index funds in a portfolio and how they can provide broad diversification and low costs. By adopting a long-term perspective, you'll be better able to weather market fluctuations and stay on track to achieving your financial goals. As we continue through the book, we'll examine more advanced topics, including the impact of inflation and interest rates on the stock market, and discuss the importance of having a diversified portfolio. In this chapter, we'll delve into the world of technical analysis, which involves using charts and patterns to predict future stock prices. Malkiel explains that technical analysis can be a useful tool, but it's not a foolproof method for predicting market movements. We'll examine the different types of charts, including line charts, bar charts, and candlestick charts, and discuss the various patterns and indicators used in technical analysis. You'll learn about the importance of trend lines, support and resistance levels, and how to use moving averages to identify trends. We'll also discuss the limitations of technical analysis and how to combine it with fundamental analysis for a more comprehensive approach to investing. By understanding the basics of technical analysis, you'll be better equipped to make informed investment decisions and navigate the complexities of the stock market. This chapter explores the world of fundamental analysis, which involves examining a company's financial statements and other data to estimate its value. Malkiel explains that fundamental analysis is a more comprehensive approach to investing, as it takes into account a company's financial health, management team, industry trends, and competitive position. We'll discuss the importance of financial ratios, such as the price-to-earnings ratio and the debt-to-equity ratio, and how to use them to evaluate a company's financial health. You'll learn about the different types of financial statements, including the income statement, balance sheet, and cash flow statement, and how to analyze them to estimate a company's value. By understanding the basics of fundamental analysis, you'll be better equipped to make informed investment decisions and identify potential opportunities in the stock market. In this chapter, we'll examine the role of dividends in investing and how they can provide a relatively stable source of income. Malkiel explains that dividends are a key component of a company's return on investment and can help to reduce volatility in a portfolio. We'll discuss the different types of dividend stocks, including growth stocks, value stocks, and income stocks, and how to evaluate their potential for dividend growth. You'll learn about the importance of dividend yield and how to use it to compare the attractiveness of different dividend stocks. We'll also explore the tax implications of dividend investing and how to minimize taxes on dividend income. By understanding the role of dividends in investing, you'll be better equipped to create a diversified portfolio that generates income and grows in value over time. This chapter focuses on the importance of diversification in investing and how to create a portfolio that balances risk and potential return. Malkiel explains that diversification is a key component of a successful investment strategy, as it helps to reduce risk and increase potential returns. We'll discuss the different types of assets, including stocks, bonds, and real estate, and how to allocate them in a portfolio. You'll learn about the importance of correlation and how to use it to create a diversified portfolio. We'll also explore the role of alternative investments, such as commodities and currencies, and how they can provide additional diversification benefits. By understanding the importance of diversification, you'll be better equipped to create a portfolio that meets your investment goals and minimizes risk. In this chapter, we'll examine the impact of inflation and interest rates on the stock market and how to navigate these challenges. Malkiel explains that inflation and interest rates are two of the most important factors that affect the stock market, and that understanding their impact is crucial for making informed investment decisions. We'll discuss the different types of inflation, including demand pull inflation and cost push inflation, and how they affect the stock market. You'll learn about the importance of interest rates and how they affect the cost of borrowing and the attractiveness of different investments. We'll also explore the role of monetary policy and how it can influence the stock market. By understanding the impact of inflation and interest rates, you'll be better equipped to navigate the complexities of the stock market and make informed investment decisions. This chapter explores the world of behavioral finance, which involves understanding how psychological biases and emotions affect investment decisions. Malkiel explains that behavioral finance is a critical component of investing, as it helps to understand why investors make certain decisions and how to avoid common pitfalls. We'll discuss the different types of cognitive biases, including confirmation bias and anchoring bias, and how they affect investment decisions. You'll learn about the importance of emotional control and how to avoid making impulsive investment decisions. We'll also explore the role of financial advisors and how they can help investors make more informed decisions. By understanding the principles of behavioral finance, you'll be better equipped to make rational investment decisions and avoid common mistakes. In this final chapter, we'll summarize the key takeaways from A Random Walk Down Wall Street and provide a roadmap for implementing the concepts in your own investment strategy. Malkiel emphasizes the importance of having a long-term perspective, diversifying your portfolio, and avoiding common pitfalls such as fear and greed. We'll discuss the role of education and how to continue learning about investing and personal finance. You'll learn about the importance of discipline and how to stick to your investment strategy, even in times of market volatility. By following the principles outlined in this book, you'll be well on your way to achieving your financial goals and securing a prosperous future. Remember to subscribe to Fate of Money, and visit smartloansanalysis.com for advanced calculators to help you make informed investment decisions.